Pay me, pay me, pay me my silver now. Pay me or go to jail. Pay me my silver now.
Good morning. Bix Weir, Roadrunner.com with your morning horn disease, your sip of chaga coffee. Yeah, I was working all weekend. Put out a lot of posts this weekend for public road and private road people, trying to keep up with the data of what's going on in our banking system. It's all happening. Nothing has been fixed, mind you. Janet Yellen and friends have chosen the path they always choose: print more money. We should see that in gold and silver in massive amounts. They allow a little bit to happen, but not much. The big question, now silver's up $1.11, which is, after being slammed down from $30 a couple of years ago, after being slammed down from $50 in 1980, up $1.11 to almost $22 is not that exciting, but it kind of is. And the reason it is because the commercial banks, the big mother pluckers who've been rigging the price of silver, have one of their smallest silver short positions ever. They knew this was coming. Everybody in the banking system on the criminal side knew this was coming. So that's what's happening right now. Silver's up a little bit. Here's what we're looking at. Right now, we're looking at silver has passed the 200-day moving average, is approaching the 50-day and the, it's past the 50-day. Where am I? Past the 200-day, approaching the 50-day and the 100-day moving averages. This is all for the tech traders. That's who the commercial banks like to play off. So when it passes those two, there's really only one question left. Say we get to $22.50, $23 in silver. The only question left is, will the commercials, this concentrated big chunk of dealers, 5 or 6 of them, will they short into the rise to stop the rise in the price of silver and increase their short position again? Or if they don't, who would? For every buyer, there has to be a seller. So who in their right mind would be selling? Now, I know some dealers have to hedge, and that's fine. They've got their physical, but that's not a lot. It's nothing compared to the quantity of silver traded, which is 500 million ounces. Right now, probably over 500 million ounces a day of electronic silver traded. So will the big banks short into the rise? My 99% guess is yes, they will. My 1% chance is that no, they won't. If they don't short into the rise, you cannot stop the price of silver from hitting 5,000, 10,000, whatever you want. You name your price. 180 years of price suppression does not end quietly. So I've said it many times, I don't care about the price. I care about the gold-silver ratio. Keep an eye on the ratio. It's at, let's see, what is the gold-silver ratio right now? It's at 90 to 1. 90. Within the year, it'll be down at 9. Within another year, it'll be 1 to 1. You're going to do 10 times better in silver as gold this year, and 100 times better in silver than gold in the long run. Why? Because silver's needed, gold is not. Why? Because silver's scarce, gold is not. There's a million reasons why. Remember, at higher gold prices, massive amounts of gold become available. And there haven't been many large silver finds. Silver doesn't act like gold. Go to the Colorado River. You could at $5,000 gold, there's massive amounts of gold you can mine. It all depends on the price. So yeah, exciting times, but nothing's been solved. They've thrown a lot of money at stuff. Janet Yellen, I'll get to that in 1 second. Right now, small banks are crashing. Why? Because it doesn't matter. It doesn't matter what they do. They're not going to bail out the equity or the shareholders. Actually, they might bail out some of the equity. That's the weird thing. And I'll show you in the Fed statement. We'll read that again. Small banks are crashing. Over the weekend, when parsing through the carnage sweeping the U.S. banking sector, we analyzed which banks are facing the highest deposit run risk in the aftermath of SIVB. Now, SBNY failures, and focused on a handful of names who have the bulk of their funding in the form of deposits which are now suddenly at risk amid what seems like a major bank run. If you have any money in the bank, get it out. Now, it's not about FDIC insurance anymore. FDIC insurance won't cover it anymore. It won't cover it. Get your assets into something real. Physical silver is your number one pick. All the billionaires are doing that right now. They're trying to get there. They don't even know how to do it. You call Andy Scheckman at Miles Franklin, 800-822-8080. Or send them an email, info@milesfranklin.com. Say, I need to get my money out of the bank and into something real. Because everybody's going to be doing it all year long. How long will the silver price be trading? I don't know. I think the comics will shut down when it hits $50. And then we won't know the price of silver, which is great. We'll have to figure out a new exchange. You go to your local coin shop and say, I don't know what the price of silver, and I'm clearly not going to give you mine because my bank's closing. Now's the time to have everything in your own possession. Yeah, there's a ton of banks that will fail, and you might not think it matters, but it does to the shareholders of the banks, the stock market, their ability to fund. Now, a lot of people say, just the big banks are going to absorb them and take everything. The big banks are the problem too, though. Let's not forget this. So we already know that the bank runs are not going to destroy the banking system because the FDIC and the Fed and the Treasury are going to backstop any amount, is what they said. But they're not backstopping the derivatives. And as these banks go, their derivatives go, and there you have counterparty risk. The largest derivative holder in the U.S., these are U.S. banks, JP Morgan Chase, $53 trillion in derivatives. Total assets of $3.7 trillion. But they have $53 trillion in derivatives. They're the largest criminal bank in the world. And they are sitting on $53 trillion. It's insane. Jamie Dimon's being busted right now for what he did down with Mr. Epstein. But I'm not talking about that. I'll get kicked off YouTube. Citigroup, $47 billion. Goldman Sachs, trillion. Bank of America, the large silver short, $38 trillion. When Bank of America goes, Jesus, what's going to happen to all the silver shorts? Destroyed. End of the world as we know it. Now, it's going to start with the small banks. One thing that kind of bothered me, I agreed with Lindsey Williams that it would start in Europe. I was like, the banking thing, all weekend I was thinking, it can't start now. The European banks are 100 times weaker than the U.S. banks. I wonder how they're going to get past this. And then we have Janet Yellen saying, we're bailing everybody out. That'll give us a couple months before the derivatives go. But this hit the wire today. Credit Suisse credit default swaps hit record high as Silicon Valley banking crisis spreads to Europe. Now, Europe's even harder to bail out because you got the EU, and every country has a different system that they want to use. Some countries are strong, didn't play in the derivatives. Some are weak. Shares of European banks plunged Monday as yields on European bonds dropped on the implosion of Silicon Valley Bank, which could force central banks across Western world to either slow the pace of interest rate hikes or even pivot. Everything screams buy silver, buy silver, buy silver, buy silver. Credit Suisse Group is one of the banks that caught our attention this morning. The shares of this troubled bank trading in Switzerland plunged as much as 15%, hitting a record low. This decline was due to concerns about the bank's ability to recapture client funds, revive its investment bank business, and manage ongoing legal and regulatory investigations. No bank can survive a run unless they get backstopped by the central bank. That's what we saw happen this weekend. These banks are still going to go down. They're still going to crash, except depositors are going to get bailouts from the Fed. Where's the Fed going to get the money? They created it out of thin air. The FDIC has $120 billion in. That's it. I think they backstopped $12 trillion by what they did this weekend. It's insane, and it's not going to help. It's a little tiny Band-Aid. So Europe's going to be ripped apart. The European Union will open the floodgates, but it's not enough. Everything is happening now. And when the derivatives go, it's over. And they are going, by the way, behind the scenes. Credit Suisse is a huge derivative player, gigantic. Same with Goldman Sachs. Same with JP Morgan, Deutsche Bank, oh my God. HSBC, oh my God. It's crazy. It's all happening. I do want to parse out the joint statement because this is the most important. statement by the Federal Reserve since the Federal Reserve's creation. This is a statement that goes right to the heart of the Road to Ruta comic books, the early comic book from 1981 when Ruta wrote in the sand. What did she write? She wrote an economic formula called On the Road to the Golden Age. It's a formula. It didn't win a Nobel Prize, but the guy who wrote it is on the panel who decides what a Nobel Prize is. So what the conclusion was, if you want to go back to a gold standard, you print as much money as possible. You print to infinity, soaking up all the benefits. Build your roads, your bridges, your houses, your tech companies, your military, and then crash the system. You print to infinity. That is what Janet Yellen announced on Sunday. And I'm gonna walk through this slowly. I'm gonna mark down some things because I was reading. I'm like, why do they say this over and over and over again? And one of the main things they say, everything's fine. Every statement that reads everything's fine, you know there's a problem. So this is a joint statement by the Treasury, Federal Reserve, and FDIC. First of all, it took all three of them to do it because it is the largest announcement since the creation of the Fed. The following statement was released by Treasury Secretary Janet Yellen, Federal Reserve Board Chairman Jerome Powell, and FDIC Chairman Martin Gruenberg. Today, we are taking decisive actions, not passive actions, but decisive actions to protect the U.S. economy by strengthening public confidence. Jesus. So they're saying the U.S. economy is in deep shit. Public confidence is in deep shit. And whose fault is it? In our banking system. There you go. You got that? Today we are taking decisive actions to protect the U.S. economy by strengthening public confidence in our banking system, meaning the banking system is the problem. The step will ensure that the U.S. banking system continues to perform its vital roles of protecting deposits and providing access to credit, meaning if they didn't do that, there would be no deposits and no access to credit to households and businesses in a manner that promotes strong and sustainable economic growth. Without this bailout, the system would have ended today. After receiving a recommendation from the boards of the FDIC and the Federal Reserve, and consulting with Secretary Yellen approved actions enabling the FDIC to, how does Janet Yellen, who runs the Fed, how can that enable the FDIC, which is a government institution, to complete its resolution of Silicon Valley Bank of Santa Clara, California, in a manner that fully protects its depositors? Depositors will have access to their money starting Monday, March 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by a taxpayer. So let me get this straight. You're a Silicon Valley startup. You borrowed money, high-risk money, from Silicon Valley Bank on the condition that you leave your cash in that bank. Right? You're borrowing high-risk money. You're a nothing startup. No other bank is doing this. You don't have the credit, except Silicon Valley Bank's looking for the upside. If you succeed, they succeed even more. But the bank went down. You're not going to lose your deposit. You're not going to lose that money they created out of thin air and gave to you, high-risk money. You see how this game works? The gains are privatized. Silicon Valley Bank and this company that borrowed from them would have made billions if their crazy pets.com idea worked. But something happened. The bank fell down. Who gets the losses? You do. They're nationalized. Don't let Janet Yellen tell you that you're not paying for it. You are paying for it, either through taxes or through the inflation of your money, because they're pumping out more money to save these banks. You are paying for it. So these high-risk loans, high-risk deposits, nationalized losses. For the good of the country, the banks have us by the balls. There's nothing we can do except wipe out the whole system altogether, which will happen with the derivative collapse. We are also announcing, they took care of Silicon Valley Bank. And then what? we're also announcing a similar systemic risk exception for Signature Bank of New York, which was closed today by its state chartering authority. All deposits from this institution will be made whole. As with the resolution of Silicon Valley Bank, no losses will be borne by the taxpayer. Signature Bank was a huge player in cryptos. That's why they're going under. The crypto DeFi thing destroyed cryptos. All the banks dealing in cryptos that had equity positions or anything got destroyed. You see how this works? These high-risk institutions who would make out like freaking bandits if it worked, didn't work, so the nationalized the losses for high-risk, high-reward stuff. This is insane. But this is the big, these last two are the kicker. It tells me that, oh my God. First of all, the Fed, now any bank who fails, the Fed has to do the exact same thing. Because the depositors will say, what do you mean? You did it for Silicon Valley Bank, you did it for Signature Bank. Now, here's an interesting line. Shareholders and certain unsecured debt holders will not be protected. Shareholders, yeah, you invested in a bank that went under. You don't get protected. Why does it say certain unsecured debt holders? Why not all unsecured debt holders? Is the Fed going to be picking and choosing who's going to win, who's going to lose? Depending on how systemic it is. Certain unsecured debt holders will not be protected. I want to know who the certain unsecured debt holders that will be protected will be. Because if certain unsecured debt holders are not going to be protected, which are the ones that are going to be protected and why? Senior management has also been removed. Well, good thing they got paid out last week with their bonuses, by the way. And that did happen at Silicon Valley Bank. Any losses to the deposit insurance fund to support unsecured depositors will be recovered by a special assessment on the banks as required by law. So the deposit insurance fund has $120 billion in it. So this is the first to draw it out. How much will it be? I really don't know. A lot. Depends on how much they sell the carcass of Silicon Valley Bank for. I would say 50 billion, half of it, 60 billion. And it's just one bank, not counting the Signature Bank or the 18,000 regional banks that are about to go under. And this is the big one. Finally, this is bigger than the original announcement of the Fed, if you ask me. Finally, the Federal Reserve Board on Sunday announced it will make available, meaning it'll create out of thin air, additional funding to eligible depository institutions. So anybody FDIC who's eligible for FDIC, you don't have to be FDIC insured, but you have to be eligible. You got to be in the Federal Reserve System, which is like a lot of banks. The Federal Reserve Board on Sunday announced it will make available funding to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors. All their depositors. The Federal Reserve just signed up to bail out every deposit in America. Every depositor in America will get a Fed bailout if their bank goes under. There's no more need for FDIC insurance. That's gone. It doesn't matter. They will bail out everything that they need to bail out. Everything. I don't care how crooked the bank is. If you're a depositor, you're going to get your money. No matter how criminal you are, Jeffrey Epstein and friends. Can you believe this? And then the kicker is the last paragraph. The U.S. banking system remains resilient on a solid foundation. Oh my God. You just bailed out every bank in the United States and you're saying it's resilient and on a solid remains? That means it was before you did this? Why did you do it if it was resilient and on a solid foundation? In part due to the reforms that were made after the financial crisis that ensured better safeguards for the banking industry. Yeah, those worked really well. Nice job. You forced Silicon Valley Bank to buy long-term treasuries and mortgage-backed securities as the safe part. And then the other side of it, they can do whatever risky crap they wanted. Those reforms, combined with today's actions, demonstrate our commitment to take the necessary steps to ensure that depositors' savings remain safe. Basically, we'll do anything. It doesn't matter what. We're going to do it. It doesn't matter who. We're going to do it. But we're going to concentrate on our rich friends. We're going to concentrate on systemic problems, meaning banks like Citibank, JP Morgan, the biggest criminal banks on the planet. They're in the top 10. Jamie Dimon's number one now. It used to be HSBC. Is Europe going to do this? Is China going to do this? Is Japan going to do this? Is Australia going to do this? Is Brazil going to do this? Is Mexico going to do this? Is Canada going to do this? Yes, they're all going to do it. They're all going to do it. They all have to do it. All these central bankers talk to each other. They all have to do it. Every country in the world will follow in the U.S. footsteps. What does that mean? That means quadrillions of dollars are going to be created out of thin air. Where do you put your money when they create quadrillions of dollars? Quadrillions of dollars, you put your money in silver. Silver and gold are the obvious, safest places. Cryptos are fine. They're for the future. But crypto people are so stupid. They got into this DeFi thing and stable coins. It's going to destroy those. I think cryptos are going to take a deep dive before it comes back. Have your physical silver in your own possession now. Because people are going to run to silver and they're going to run to gold. And if they have half a brain and take 2 minutes to study the difference between gold and silver, they are going to be begging for silver. Elon Musk, with however many billions he has, I think he already has part of the JP Morgan silver on a derivative contract coming out of the Bank of America, but I don't know. He's not an idiot. Warren Buffett. Why did Warren Buffett invest in silver in the 90s? Because there was a supply deficit. We're on our third year of a supply deficit with silver again. Do you think Warren Buffett's behind the scenes piling up the silver? He didn't tell anybody back in the 90s until it was found out. He had already spent 3 years hoarding silver. And he's part of the good guys, believe it or not. That takes a while to understand that. But yeah, Warren Buffett's going to take down the criminal cabal with silver, along with other people, including our friend Elon Musk. Wait till Elon tweets, better get your silver, better get your gold. He's going to say that at some point. How about that? How about that run at the local coin shop? Andy Scheckman, you better be ready for people to say, I don't have any money, but I want to buy an ounce of silver for $10,000. Do you have an ounce? That's how crazy it's going to get. All right, that's what I got for you. I know it's crazy time. And then this, oh my God. They wheel out this old, decrepit shell of a human being and to say, Americans can have confidence that the banking system is safe. You believe him? The banks are crashing, by the way, on the stock market right now because their equity wasn't. I wouldn't be surprised if Janet Yellen comes in and says, we're gonna backstop the equity too. We're gonna backstop the derivative market. 2.5 quadrillion in derivatives. And they can do it. Absolutely, they can do it. But what happens? What happens to the faith and confidence in our leaders, in our currency? Buy as much physical silver as you can get your hands on right now. Again, go to your local coin shop to start with. Do it today. Do it Monday. If you don't have a local guy that you trust, which is key, you can use our guy. Andy Scheckman and Miles Franklin has taken care of so many Roto-Rooter people. Send him a request for what he's got in inventory and the prices. Just write him an email, info at milesfranklin.com, and he'll take care of you. My suggestion, buy what's in inventory. I trust Andy, but I don't trust the system staying together to wait a couple weeks or 3 weeks or 4 weeks. But if he has no inventory, you might have to. But I do trust Andy, so he'll do everything he can. But now's not the time to be waiting months and months for silver orders, especially the online people. They'll be gone. Every time we have a crisis, some big dealers go down because they promise too much and they can't get it or they run off with your money. We've seen it so many times in the gold and silver world. Find someone you trust. I trust Andy. All right, that's what I got for you. If you're a private road member, I posted another one last night. Red alert, Fed just bailed out all banks for any amount forever. Pink insanity has hit. Silver will end their game. And then before that on Saturday, financial expert ignorance is off the charts. SIPC insurance is a Ponzi scheme. Go check that out at your private road members. If you want to join the private road, click subscribe today. And yes, we are giving away the coolest silver coin ever we give it away free with every membership, $2.99 for a year. And you get all the archives, 3,000 articles, videos, you name it, is on the private road at Road to Ruta. Go to roadtoruta.com. If you don't have any money, put your name and email address in here, and you'll get public road updates. All right? I'll probably be updating the private road again tonight. There's a lot going on. I'll talk to you later.